Good morning, traders. How are we doing today? Hopefully everybody's doing great. My name is Jason Krutzky, and it is a pleasure to be here with you this morning for another episode, another show, another day of office hours, another office hour session. I told you guys last Friday we were live. I told you guys I was going to be here on Monday, and I apologize for not being here yesterday. Things were very busy yesterday, and I just was not able to do it. But we're here this morning, and we're here to answer your questions about TrendSpider. We are on the very, very final hours of our St. Patty's Day sale. You can save up to 67% for your first year with us. If you have not yet taken advantage of this killer deal, what are you waiting for? You have until the end of the day to make that decision. I see that there are a few of you guys here this morning. Thank you for waking up early and being here with me. The markets are looking like they're struggling a little bit. Crypto is getting rocked, and things are looking a little dicey and a little hairy out there. And I'm anxious to see kind of how everything ends up playing out. If this is your first time at a office hours session, TrendSpider and Chill, as we have affectionately renamed it here in the chat, what we do is we hang out and we talk charts. We answer any TrendSpider related questions that you might have. We build scans. We dissect strategies. We explain how to utilize new tools or old tools. So this stream is for you. If you have questions that you are looking to get answered live, this is your time. So I'm going to ask you all very kindly here to say hello. Introduce yourself. Where are you tuning in from? What are you trading today? And most importantly, what are you doing here? And how can I help you? We've got the FOMC announcement tomorrow on what their plan for the rates are. Everything that I've read is they're going to stay the course and they're not going to budge. And they're probably not going to budge in May. And perhaps maybe they'll cut rates in June. But I don't know. We'll have to see on that. I will be live tomorrow for sure for the Powell presser. So if you guys want to tune in tomorrow and hang out and watch Jerome Powell, I'm going to be doing that. All right, so we've got a question in chat from Steven. Steven, you reached out to me over the weekend. You're tied up at work, but you want to at least watch with no volume. You messaged me on the last show about consolidating range. Yeah, creating alerts. You want to create an alert for a consolidating range on the SPY SPX, right? All right, so we're going to do it on the SPY because the SPX is an index, which means it is 15 minutes delayed on the platform. So let's talk about this, Steven. So presumably, Steven, you said you're playing 0 DTEs, right? That's okay. You're tied up. If you if you have any time to kind of like delve a little bit further into what you're trying to do, feel free to just post stuff in the chat as you have the time. But kind of what I would do is I would be utilizing range, this guy. This is your range indicator. And I guess there's a couple of different things you can think about. So on your range indicator, by default, it's set to 20 candles. Right now, I'm on the 5-minute time frame. That's the lowest time frame that you can get alerts on TrendSpider. So depending on kind of where your head's at, are you looking for just today's range? Or are you looking for just kind of like the average range over any given, like over a longer period of time? Because if you're looking for the average range over a longer period of time, then perhaps simply utilizing a larger length might be the way to go. And you can do like very simple things, right? So here's a 200 candle range. Here's your 200 candle range high. Of course, as 200 candles pass, here's where you made the 200 candle high previously. I'm just going to mark it. And then 200 candles pass, and then here's your 200 candle high. And so it reduces down to like somewhere in here. Right? After 200 candles pass, then it kind of drops a little bit to the next highest high. And then it drops a little bit more to this one. Right here is representing this high. You can see that. And then it really drops dramatically right here, which means 200 candles have passed from this high, and now this is the high. Yeah, for 0DT, I hear you. But you can think about this. You can utilize this concept, whether, if you can utilize it with whatever length you want, right? Like choose a length that makes sense for you. I'm using the 5-minute time frame. I'm using a 200 length. So if I were to throw up let me put these on. These are my daily markers. You can see it's like a day and a half of 5-minute candles. I don't know how many 5-minute candles there are in a day. There's 6.5 hours in a trading day. There's 12 5-minute candles per hour. So like 90 5-minute candles in a day. I don't know. Y'all do the math. It's a little early for me to be doing the math in my head. But so the first thing that I would think of, if you're just looking for price breaking out of ranges, what you could do is you could have like just whatever range length you decide makes sense for you. You could just put alerts on these guys. So just create a breakthrough alert for this one, the top one with a 5-minute confirmation candle. If you're Steven, I'm not sure if you're utilizing 78. Thanks, Grayscale. Appreciate you. All right, so 78 5-minute candles in a single session. So maybe that's what you want to do. Like you want to utilize a 78 length. I don't know. You might want to play with it because, again, I don't know what makes the best sense for you. But what I would suggest, if you haven't already started using our dynamic alerts, Steven, you can right click on these range bars or these the range channel, essentially. You can create alert on it, and you would choose the breakthrough alert here. I mean, I assume anyway, that's what you would want. You would want to be alerted if price actually broke the range, broke through the range on either direction. So I would take the sensitivity down to 0, and then I would put my expiration, just max out my expiration to the biggest time, or the longest amount of time, and I would max out my triggers too, just so that you get alerted kind of every time this is true for at least a little while, 90 days or up to 20 triggers. And obviously you're going to get more, over the next 90 days, this is going to happen way more than 20 times. So you're going to have to recreate this alert essentially every 20 triggers. But you can create an alert on the top and on the bottom, right? Just range low and range high breakouts. Trigger them or set them both to 20 triggers. And so now on the SPY, I've got an alert on the 5-minute time frame to let me know when price breaks down below the current range low or above the current range high. And that's a 78 candle range. You've been using the tightening Bollinger Bands, but didn't know if you had a better idea. Okay, so are you really specifically looking for, you'd like to know as soon as it gets into a consolidation period? Okay. Yeah, I mean, Bollinger Bands are what? They're 20, it's a 20 SMA with, like the middle line of a Bollinger Band's a 20 SMA. And then you have the standard deviations. or make up the upper Bollinger Bands. What might make more sense for you is it might make more sense to use the range bands. If you're specifically looking for tightening of range, you would do it the exact same way, right? So I'm going to go to a multi-factor alert. And I would say something like this. Let's say, I don't know, 5-minute range high. Is within range of indicator 5-minute range low. And then just define a percentage. Do you have a specific... Do you have a specific like range that you're looking for? Like a percentage, like how tight should the range be? Like if we're looking at SPY, let me do something really quick. I need to kind of think through this a little bit. Because there's a bunch of ways that you could define it, right? You could say like some moving averages are getting really close to one another. You can define the distance between the upper and the lower bands of the range indicator. Ooh, see, Steven, now you're not speaking my language. Now you're speaking over my language. I'm not like a huge options guy. So 20 deltas on each side with 50 wings. Are you talking about birds? No, I'm sorry. I don't know that. I don't know exactly what that means or what that represents. Let me think through this a little bit more though. Hold on. Yeah. All right. So I'm not sure exactly which one of these indicators would be the best for you. And I'm not sure which would be the most, like what length would be the most effective for you. I almost have this, well, let me see what else is here. Because I know there's a previous day's range too. Ooh, hold on. Let's check this out. So I'm looking at the average daily range indicator. I don't know too much about this indicator, admittedly. So I would maybe need to look it up. Let me see. Darn. I wonder if you could use ATR. Let's see something. Ah. So one thing potentially that you could use is ATR. Maybe. Like, I wonder if... Let's use a longer length here. Let's use a... Sorry, I'm being kind of quiet. I'm just thinking about how we could use this. Yeah, I mean, my first instinct is looking for situations like this. Whether or not this is like the right way to be thinking about it. But well, sorry, that's not an arrow. Like right here. See how tight the bands get right here? Hold on. The thing is, this is resetting every day. This is what you're looking for, though, right? Yeah. Okay. So then let's talk about this as like a thing. So right here, they're within 0.33% of one another. So let's just do something really quick. I just want to see it on the chart. So I'm going to say indicator range high is within range of indicator range low by 0.3%. And then I'm going to change this length. Let me make sure. Yeah, we're using 78. All right, so... And then we'll just like get out, I don't know, let's just like get out after a certain number of candles have passed. The reason why I'm doing this in the strat tester is not to see if this is a strategy that actually works. I'm just trying to see how often it happens and where we would be getting in. Like sometimes you can see something on the chart that you are interested in. And sometimes an easy way to go about that is sometimes an easy way to find it is to just strategy test it, and then the strategy tester will kind of mark it for you. I'm going to make this a little bit bigger, 0.4%. All right, so here, so now it's entered into that. 19 positions over the last 4 months. So this length may not be right, but here's another instance of it getting really tight. Right? Here's another instance of it getting really tight, another instance of it getting tight. So what you may have to do, Steven, you might have to, here again, it's getting really tight. What you may have to do though, Steven, is you may want to tool around. Okay, sweet. This is what you're looking for. We're solving problems here. All right. So then maybe the next step here is you would want to reduce Like, what happens if we reduce this range lengths? Or this range's length? Like, what if we made it like, I don't know, maybe make it like 34, half of that. Because then you might be able to get this a little bit tighter. You might get more trades in. It might be more tuned into, oh, whew. It might be more tuned into your time frame. This is where like you'll have to really experiment with like a percentage distance between the upper and the lower range that makes sense for you. See how it's like missing a bunch of stuff now that it was capturing before. Here's a section here. So it's capturing the really tight stuff. So yeah, I think, Steven, perhaps we might have just kind of pinned it down for you. And then once you, or let me know if this kind of gives you, okay, cool. So this is getting you where you're trying to be. The next step that I would take if I were you, Steven, is I would utilize this, or I would create an alert with this. So again, once you have whittled down the length that makes sense for you, for the range bands, remember we were at 78. I reduced it down to 34. So essentially like a half, I cut that 78 number in half just to kind of like make it a little more volatile. Since you're utilizing this for 0 DTEs intraday, then maybe you want that, maybe you want the lengths to be shorter for more, you know, they would be more precision tuned if they were shorter lengths. And then you could tighten up the percentage that they are near one another, that they are within, quote unquote, within range of one another. I would think you could anyway. Let's see. Oh, shoot. Hold up. My bad. Here we go. I need to change this length. So I made this 20. Let's make this 20. And then we'll do like a 0.15%. Because, you know, if they're shorter length, then you're going to have more instances of them getting closer to one another. So maybe when you shorten the length of them, you would be then reducing the percentage distance between them. Just looking back in time to kind of see, yeah, I mean, it's finding instances where things are pretty darn tight, and then it's just a matter of, like I say, refining this percentage. Refine the distance between the two to make sure that you're getting enough positions. All right, so by increasing it to 0.2% between the range low and high, the high is within range of the low by 0.2%. We're using a 20 candle range. So this is going to be adjusting a lot intraday. But you can kind of see what it's finding. What if I get out like 100 candles later? That way we're not like re-entering a bunch of times. Because presumably you're looking to get in when things are tight and then ride the trend. So here you're getting in when things are tight. Here you're getting in when things are tight. Just want to see if it works. I don't know. You can kind of play around with this. Play around with those lengths. The lengths of your indicator. Play around with the distance between the two. The percentage. And then once you have something that you feel like is pretty well honed, what I would do then is I would come in here, create a multi-factor alert, and then we would say indicator. You need about 30 minutes in consolidation for decay. Okay, so what if you said like, actually, what if you said this? You could try this. I don't know if this is going to work. But here's your 30 minutes. You duplicate the condition. 6 times on the 5-minute, and there's your 30 minutes where you are within range. Yeah, so maybe that's how you do it, Steven. Is you're defining multiple candles upon which this is all true. Does that make sense? Why not? Market pullback time. I mean, crypto for sure. And we know, I mean, we talked about this if we talked about this in the weekend update, in the email, in the newsletter that we send out every week. If you are not yet, speaking of, if you are not yet a subscriber to the newsletter, let me get you guys a link to that. Awesome, Steven. So yeah, so this is how you do it. All right, so what I'm going to do, Steven, just for, let me do something really quick. I'm going to save this as a template. I'm going to say Steven's tightening range. I'm going to say save. I'm going to share this. Oh, cool. Why not? Yeah, you signed up last weekend. Awesome. I'm glad that that you found it useful. But we kind of noted this in the weekend update, that it was kind of looking a little bit like we might catch a little bit of a breather. Still kind of using, I'm personally still kind of using Apple as the bellwether, even though I know that Apple has lost, to some degree, it's lost a little bit of its bellwether status. I'm still kind of really watching it because, to me, it's like it was at a make or break spot around that 169, 170 area. And they held it. Will they keep holding it? I don't know. Jeff, I'll get you that XLE chart in just a moment. We'll look at it. Gosh, why is this taking so long? NVIDIA too. I mean, another obviously clear bellwether. Why is this taking so long? This shouldn't be taking so long. Hold on. Let me do something real quick. Interesting. All right. Ooh, what is this chart? That's gross. Yeah, you know, Jeff, I almost wonder if, like, these are some weird charts. Well, regardless, I'm going to share this. Hold on. Gonna give this a second to do its thing so that we can get a link and I can share it with you, Steven. And then once you have this, sir, here we go. Once you have this, so there you go, Steven. And once you load this into your platform, just come in here and click on the 3 dots and say save as template. And that way it'll save it as a script for you. And then once it's saved as a script, you can then do things like this. You can go into your visual scripts. You can type in Steven's tightening range. And then you could send this to an alert. And then it'll input those conditions into your multi-factor alert. Just pick the chart. Make sure you're on the chart that you want to get that alert on. So like if you wanted it to be on SPY, go to your SPY chart. Come to your alerts here, or rather come to visual scripts. Steven's tightening range, and send to alerts. And then you would just want to max this out so that you get this alert every time, however many days that is for your account. And then just max both of those things out, create alert, and you're good to go. Right on, Travis. Happy to have you, brother. Thank you, Gary, as always. Let's look at the XLE chart. Haven't looked at XLE in a minute. You're very, very welcome, Steven. It is my pleasure. I'm glad that we got you what you were after. Like I said, play with that. Play with it. You know, make it make sense for you. Turn off indicators here. Whenever I'm analyzing charts, this is how I roll. I like to look at big time frames. Ooh, this is interesting. So you guys know me, or if you don't know me, I'm a trend guy. So I'm always looking at like higher highs, higher lows, lower highs, lower lows. Yep. Travis, you can send strategies. You can send scanners. It's pretty great. Feel free to download that one or import that one into your account if you'd like. We are not stingy here. But yeah, so I'm a trend guy. So I'm always looking at like what price has done. Did price make higher lows? Did it make lower lows? Did it make higher highs? Did it make lower highs? And it appears something that I had identified some time ago. If you're a trend person, let's talk. If you guys want a little lesson on how I look at trend, we could talk about it if you want. So here's a low to a high to a higher low to a higher high. Right? And so in an uptrend, when price is coming back into a low, right? After it makes a new high, you would then expect it to hold a higher low and then continue on and make a new high. And they initially tried to hold a higher low here. They tried to hold a higher low here. And then ultimately they broke down. They lost this low. And you can see not only did they lose it, they tested it once and failed. And then the trend changed. Right? What happened right here? Higher low. So because they made the higher low here, that kind of sets up a new high, which they made relative to this one. Because now you're looking at this. You're looking at this low to this high to this low. So you're anticipating a higher low relative, or a higher high relative to this one. Right? And so they made it and they held it. So continuation higher. So on a lower time frame coming off of these lows, this is quite bullish. But then on your higher time frame, they made a new low. Because they made a new low relative to this one, the one that brought you up to the high, basically, you would anticipate that when they got back to this high that they would test it and they would fail. And what did they do? Essentially in here. What they did was they got to that high and they initially failed it. Well, they ended up holding essentially the highs that were taken right over here So they broke above it. They came back, tested, and held. I mean, it's loose, but that's what they did. You can see it very cleanly here. So they've kind of done what you would anticipate them to do. And it looks like they're going to try and break this thing out. Now, if they had taken this low down even lower, like into here, and lost this low over here, then it would be an even more, a stronger conviction that they were going to sell when price got up here. One low lost is kind of like I've traded this way for quite a while now, and I'm kind of learning just from experience that one low loss like this, you can expect a reaction, but it oftentimes doesn't ultimately result in a continuation lower. It does look like they're going to continue higher. But that's why they failed where they did, was because of this. Because of this high and this low. They lost this low, so then you anticipate them having trouble at this high. Market structure 101. Well, I don't know 101. It's like market structure 301. And I'm going to give you guys a little reference point, even though you're not really asking for it. I'm going to show you. I made a video about this stuff. I'd like to share it with you. Here we go. Here is the video that I made. That is the video about market structure. Very much recommend if you're interested in learning about price action and how price action kind of works. Strong recommend learning a little bit of these market structure concepts. It'll give you a good sense of how to anticipate moves. Just how to gauge expectation. USO's pulling back. Well, I thought USO was I thought oil was like doing great. Oh, ooh. Let's go to the daily here. Interesting. I mean, taking those same concepts that we just talked about into play. Essentially have this. Right? If this is your nearest term high, you kind of got this. So then you'd be looking somewhere in here. 101 as a spot where they might reject eventually. You also have all the way up here too. 122. Yeah, I don't know. I mean, I don't pay a ton of attention to oil or to energy in general. But that's how I look at it. There are a handful of you here. Oh, I was supposed to get you guys a link to the newsletter. Hold on. Let me get you that real quick. This is cool. We spent a lot of time on this. It's free. Comes to you every weekend. And what this is, we scour the platform, myself and my colleagues, scour the platform for kind of the most interesting stuff, whether it be, you know, we look at seasonality to see if there are any names, any important names that have like really, really strong seasonal strength or really weak seasonal strength in the week to come. We look for unusual options, like clear unusual options buying or selling. We look for insider buying and selling. We look for all of the latest earnings, highlight some of the most interesting charts. There's a lot in this newsletter and it's really designed to help get you kind of prepped for the week to come. You know, that's really what it's all about. You can do all of it on your own for sure. It's all there in the platform, but you know, we all need a little helping hand from time to time. So sign up for that newsletter because it's free. There's no reason not to sign up for it. We've got about 20 minutes here. Like I said, I'm going to be back again tomorrow. We've got the Jerome Powell press conference. We all know, or I believe we all know, what he's going to say tomorrow is that the rates are unchanged. But we don't know what else he's going to say. You know, is he concerned about what appears to be a tick up in inflation? Is he not concerned about it? I know he's going to get lots of questions. He's going to have to answer those questions. And how's he going to answer them? And that's really what the market is like all about. The market knows he's going to say that they're not raising rates and they're not decreasing rates. Right? But what we don't know is what he's going to say in between. Maybe he'll guide us on some expectations for what to expect for later in the year. As I said earlier in the program, seems like May rate cuts are now off the table and everybody's looking at June. What's up, Gary? What's up, James? Cheers to you guys. Thanks, James. Appreciate that. For some reason, it always gets stuck on this song. I'm going to switch. So we'll be here tomorrow. It starts, I believe, the announcement comes at 1:30 Eastern, and then the presser's at 2 Eastern, or maybe it's actually no, the announcement's at 2 Eastern, and then the presser's at 2:30 Eastern. So I'll be live like 30 minutes before the announcement, and then we'll stick to it and we'll watch the presser, hear what he has to say. So if you guys want to tune in and you'll be around to hang out and you want to hear what Jerome Powell has to say tomorrow, come hang out with me because I'm going to be listening and we'll be watching the charts to see how they react. I'm anxious to see. Yeah, right. So Jeff, that's the whole other piece, right? Like, we know we're in an election cycle, and presidents are trying to print the books to look really good for their future election, right? So will Biden like force oil makers to increase the supply? I don't know. He might come in and wave his wand and make it so that energy decreases in value. But with summertime, we know that summertime is travel time. Historically, doesn't it increase in the summertime? I don't know. I actually don't know that. But something to think about. Back of the napkin math. I don't know. I'm excited for it. I feel like awesome. Cool. Thanks, Jeff. I hope you enjoy it. I hope you find it helpful. I kind of wonder if tomorrow maybe Powell does say something that really kind of affects the markets. We all know the rate cuts are priced in, or the lack thereof. That's priced in, I think. Do they go up in an election cycle too, or an election year? I mean, I suppose we could look. When was the last election? 2000? Well, we had COVID. So everything went up post-COVID. You posted in the Discord looking at seasonality XLE. Oh, let's do that, bro. Good thinking. All right, so seasonality. This is a great idea, James. Seasonality. For those of you who are uninitiated, seasonality is our way of knowing kind of how a stock performs on the monthly, on the weekly, on the daily, on the hourly. So what this is showing us, just the percentage gain. It did a stock increase in price for the month, or did it decrease in price? If it increases in price, then on that particular month, it gets a green, essentially like a green bar. And if it decreases in price, it gets a red bar. And the percentage of time, or the percentage of months or days or weeks or hours that it is green versus the percentage of time that it's red, that's what we're seeing here. So like February, 67% of February's are green for USO over the past 18 years. That's what this is telling us. And, you know, alternatively in January, 33% of Januaries are green for USO over the past 18 years. So what James is saying here, he's saying filtering this out for election years. So where it says exclude periods, you can exclude years. And presumably, James, the way that you were doing this is you were... What were election years? I guess 2020 or 2022, 2016, 2012, 2008. Is that right? I assume. Oh, CVX is a bit more data. Okay, let's look at that. So then what you would do here to filter it out. So we would be excluding, I don't know, let's say like 2001, 2002, 2003, 2005, 2006, 2007, 2009. You guys see where I'm going with this? 2010, 2011, 2013, 2014, 2015, 2017, 2018. So we're leaving in election years. Hopefully I'm doing this correctly. 2019, 2021, 2022, 2023. Am I doing this right, James? Is that how you were thinking about it, James? And we could even go back even further if you wanted. So we could say like 1999. We could say, oops. We could say 1995, 1994, 1993, 1991, 1990, 1989, 1987. Wow. That's interesting. Look at this. 1986 or 1986, 1985, 1983, 1982, 1981, 1979, 1978. All right, so that's as many pieces as I could put in there. But dang, this is painting a very clear picture that historically election year cycles or election years, April is a really, really strong month. And then like James is saying, declining into the summer. So if you're looking, and this is just with CVX, keep that in mind. This is not with every single oil ticker. This is not with XLE. This is not USO. This is just CVX. And we're looking at CVX because, like James said, it has more data, 50 years worth of data here. So we can get a lot of information from that. Oops, I just realized I put 185. I should put 1985. And we're now at a rave, according to the music. Yeah, this is interesting. So like if you're, and I mean, look, wow, so crazy. If you're thinking about this trade, like this is smart. You've got oil ripping, or like CVX is very strong in the month of April. And then a huge decline in its relative strength. We could, James also recommended adding mean change. And that's not a bad idea, because now here we can see like the mean change, the average change for that month. So in April, or during election years, seasonally, this is telling us 6.29% average change for CVX in April is on election years. Looking back, damn near 50 years. Where does 6.29% take us from right here? I always like to see if the chart has something that like if the chart is set up such that that kind of move would take you into an interesting spot, and it would really. It would take you back into those September 2023 highs. A 6.29% move from here. That's interesting. I'm going to send this. I'm going to remember it. Let's do this. I want to send this to my friend who might find this kind of interesting. James, good call out, man. That's cool. So hopefully that was a decent explainer on how you would utilize seasonality to kind of pin things down. You could then, if you really wanted to, man, you could take this, like take these years, and you could just do things like, you know, go to SPY. Actually, it's already in there. Never mind. You don't even have to, for some reason I thought you had to copy it. But you don't have to do that. SPY, 100% win rate in August and election years since 1993. That's interesting. So come towards the end of August, you're selling the highs for a fade into the lows. October performs horribly. XOM, we could look at XOM. Well, also Buffett has Oxy too, right? XOM, same look. 88% win rate. Oxy, I don't think, has been around as long. I could be wrong about that though too. Oh, it has been. Never mind. Oxy, not quite as good. 69%. Mean change, 6.24. Man, this is very interesting, for sure. It definitely is suggesting that this is the time to be looking at and considering taking oil names long, man. Interesting, James, man, cool. Girl trader, we're identifying, so we're looking at seasonality on oil names. And specifically, we have filtered seasonality by just election years. So we've excluded every year that we can exclude over the past, essentially about 40-ish years, 40, 45 years. So all of these are non-election years. So we're just looking at oil performance during election years. Yeah, that's how we're thinking about it. I mean, you could use this kind of this analysis for the entire market, right? What performs well during election years? Just exclude non-election years. And then just pop through your seasonality charts and see how do things tend to do. How does Apple do on election years? Tends to do the best in August. Tends to really struggle towards the end of the year. Let's see. Girl Trader, did you say you're a swing trader trying to use anchored VWAP? What's your thought on that? Did you have a question about it? Is there a screener script for this setup? No, you can't input seasonality data into the scanner, if that's what you're asking. But in many ways, what we're looking at is a scan, right? Like it is a screener in and of itself. We're filtering price data by years and by time. By periods, by month of the week, we could do this by week of the year, we could do this by day of the week, hour of the day. So in a way, it is kind of like a screener because we're just filtering out data, but there is not a way to scan for this. You would have to like manually go through your charts and see. Here you go, BA. This is interesting. BA has been absolutely getting hammered, but look how it tends to perform coming into the summer on election year and during election years. Strongest month of the year, June. Second strongest month of the year, April. Interesting. And it's coming into a previous low after it made a new high. Seems like a relatively interesting spot. Have a good idea and scans for swing traders. I'm open to receive. Well, all right. So I get these sorts of questions a lot about this. It's really, really hard for me to make a suggestion about a swing trading scan or idea. Simply because I don't know your time frame. I don't know what assets you trade. It's really hard to do that. But if you wanted to give me like a little bit more info, then, you know, a little bit more about what you're doing and what you're looking for, we could absolutely talk about it. I am just about running out of time though here too. Travis, you're looking for a Lulu pop on the 27th. Yeah, James, a preset, like a non-election year preset would be interesting for sure. Ha, Jeff. Yeah, who knows, man? Maybe. All right. Well, Girl Trader, I do want to help you. I really do. And I would love to, like, you know, work on something with you. It doesn't have to be today. I do these live streams relatively often. We're doing one tomorrow for FOMC. Earnings. Got it. Yeah, that makes sense. Travis, let me show you something really quick. This might help you. So in the strategy tester, check this out. Earnings dates within the next X days. So I'm going to say earnings dates are within the next X day as my entry. And then earnings dates within 1 day as my exit. I'm going to increase the number of candles, and then I got to switch this to the daily here. All right, so here's your earnings run-up. Essentially what we've got here is an earnings run-up scanner. Or, well, it's not a scanner, it's a strategy. But this can tell you, how does this thing tend to perform in the days leading up to earnings? You said you're looking for you're looking for Lulu to pop on the 27th. Presumably. Interesting. So hold on. So their earnings are on the 21st. Yeah. That's why I'm showing you this, because you're new, and I want you to know that this is possible. So this is kind of cool. You can test and see how does it tend to do running up into earnings. Does it tend to do well? Does it tend to do poorly? I can tell you right now, this does awful. This strategy does not work well. Really lousy performance across the board. And then what else it does? Actually, let's do this. Yeah, I don't know. Doesn't do well. SPY intraday, sure. And I hear you guys, you're talking about the monthly VWAP. I see. There it is. Monthly anchored VWAP. Very clear. Has been a decent spot, too. If you're trading this monthly VWAP, this is definitely a place to try. Just filled a gap, rejecting, risking off maybe a new high, 512, 80 or something. Anywho, you guys, my time is up. I have no more time. If you have enjoyed hanging out today, if you've learned something, if you, I don't know. Oh, hold on, girl. You're using the 21-day EMA scan on the daily to look for bearish and bullish stocks. I do have one question. What is the dangerous symbol scan? All right, so dangerous symbol scan is just like a pre-scripted little name. Like whenever you create a scanner, it comes up with some kind of randomly generated name. And yeah, dangerous symbol scan is just a randomly generated name, of which there are quite a few randomly generated names that you'll see. My time is come and gone. I have no more time. I got to jump. But it has been a pleasure hanging out with you guys today. I feel like we got at least a couple of questions answered. Girl Trader, I would love it if you came back to hang out again and we could talk about this a little bit more. We could dig into that 21 EMA idea of yours, and we could maybe use it to find some stuff that you might actually be interested in finding. If you have enjoyed the show, I need you guys to do two things. If you haven't already, I need you to subscribe to the channel. That way you'll know every single time I'm live. You'll get an alert to let you know. And I need you to like it. There's a third thing that you could do if you really wanted to, is you could reach out to support and you could say, hey, I really like this show. I hope you guys keep on doing them. You can do that via the contact us button. Love office hours. Let's see them. Let's keep them coming. I want to keep doing them. You guys seem to enjoy them. I enjoy hosting them. They're really fun. I love helping you guys out. And, you know, the more you guys subscribe, or the more of you that subscribe, the more of you that show up every day or every time we do these, the easier it is for me to point to this show and say, hey, this is important. We got to keep doing it. So please, hit me with a like, hit me with a subscribe, and, you know, tell a friend. If you got a friend who's a trader who might be interested in this sort of stuff, might be interested in learning a little bit more about the platform, let them know about this show. Spread the word. Let's make this thing into something bigger than it is. That would be super cool. It has been awesome hanging out. I will be back again tomorrow at around 1:30 Eastern, I believe. Again, like I said, yeah, I need to get you on, Gary. Maybe we can have you on. I need to figure out how exactly to do that. But yeah, that would be awesome. Yeah, I'll be back tomorrow for FOMC. Keep that in mind, y'all. FOMC tomorrow. So, potentially you got a chance of the markets kind of like sitting sideways. Once the morning volatility is over, maybe markets chill for a minute and like await whatever he has to say. Tomorrow's going to be a really volatile day, or likely is going to be a volatile day. So keep that in mind with your positions. Have a great rest of your day. I can't wait to see you guys tomorrow, and we'll do it all again. All right. Take care, everybody. Thank you for being here. Bye.